Aurora Cannabis is getting beat and drugged through the dirt once again. So let's talk about it. Welcome to Framework Fortune. I'm your host Ben, and today I'm going to be talking about Aurora Cannabis in the news headlines. Once again, the CEO has stepped down, but we'll dive into that in a little bit. First, if you're new to the channel, go ahead and hit that subscribe button and the notification bell to be updated whenever I drop videos about day trading, the stock market, building your credit, building the framework for your financial freedom. Now, you can see it behind me. The CEO departs, 500 jobs cut, credit line reduced. Panic has definitely ensued as some investors started dropping Aurora right away. It was all the way down to 150, but it kind of rebounded back to that 175, $2 area today almost. With this panic and the problems that's going on and still going on, I could see maybe getting out of this stock if you're really worried about it. If you have money invested in it and you're already down a whole lot, I mean, I don't know how much, this is really going to keep dropping. It is very possible it could get down to $1, maybe even below $1 if they can't turn things around. But I do not think that this is the end of Aurora yet. What makes me think that is they have a plan in place. The CEO is stepping down. Well, guess what? The company's been hurt. It's been doing bad, so good. The face of the company, if you can't handle it, get out of there. Go somewhere else. Let Aurora get somebody in there who can make the decisions that they need to make instead of doing things to hurt their shareholders like they've been doing recently. But a lot of it's more media and social media bringing them down than it is just the company itself having issues. But once again, like I've said before about Aurora and the whole cannabis sector, this is a brand new sector. This is not a business that's been in business for 20, 30 years, that's having issues. This is a new sector. This is a new company. They're not going to have an easy time starting out. We've seen that in this cannabis sector. Canopy Growth has had problems. Afra's had problems. These Canadian companies are having problems because Canada is one of the first major countries to really legalize it and go pretty hard with it. And with that happening, you're going to have issues no matter what it is, especially a drug that's been classified as one of the strictest drugs on any law enforcement level. So, it's going to take some time to get all these loopholes worked out. The companies that will survive are the ones that are going to be profitable and the ones you should invest in. Now, is Aurora one of those? I think so still. This is not making me run away or get scared of this company. They are having issues. Like I said, that's going to happen. But they are doing something about it. Yes, they cut 500 jobs, and yes, their credit line was reduced. But what that shows me is they're making an effort to stay in business. Sometimes you have to downsize in a business if you're not making the money at the moment because you have too many employees or you have too many facilities, stuff like that. Then get rid of some. You have to do that. It's life. It's business. There's plenty of other dispensaries and farms I'm sure those people can go work at. But from an investor standpoint, at least in my eyes, in my opinion, I feel like they are actually trying to make some progress and survive these issues in the beginning stages. So that means they want to stay in business, okay? So not only that, they have a lot of facilities. I'm sure they can liquidate where they need to and get through this. They probably have more facilities than any other cannabis company out there right now, at least globally anyway, and very large facilities. So they have some equity places in the company, but I think they want to reserve those for worst case scenario. That's what I would do anyway. I wouldn't tap into those resources of those facilities globally when potentially in 5 more years, maybe 10 more years, those facilities might be making a ton of money for the companies. Okay, so there's the headline. what we saw at the top. And then Terry Booth will retire but will remain a director on the board. So this is kind of like the last guy who stepped down, who went to a company that Aurora owns half of the shares of and has 51% voting rights. Kind of in the same family. Well, Terry Booth's not even leaving Aurora. He's retiring. Maybe he's got enough money and he wants to be done. I mean, he's pretty old, so that's not that unlikely. And this might be too much for him. Maybe he's got health problems. You really don't know. It's his personal life. I'm not going to dig to find out the information, but there's plenty of reasons he could have retired besides being scared the company is going to collapse. But even though he retired, he's still going to be on the board of directors, and he's still with the company. So did he really leave? I mean, really? He will be replaced on an interim basis by the executive chairman, so that's fine. I look forward to serving as interim CEO. That's good. He's looking forward to it, so Aurora must not be that bad off if he's looking forward to it. Of course, they're going to tell you whatever that you want to hear, but still, at least he's positive about the whole situation. And executing on our short-term plans, which include a rationalization of cost structure, reduced capital spending, and a more conservative and targeted approach to capital deployment. So, like I said, they have a plan. They're trying to execute. They're trying to survive. That shows me that this company wants to stay in business long term. They're not going to let a few bumps in the road destroy the company. So that's a good thing. Shares plunged as much as 20%, down over 74% over the last 12 months. Of course, everybody's not been too happy about that, but like I said, new sector, new problems, new issues, they got to get worked out. So with this 500 staff across the company, 25% of corporate positions, good. Because who gets paid the most? Corporate. So they took out 25% of their corporate positions. That probably freed up quite a bit of money. That was a smart decision. Those people worked for corporate. They've got that on their resume. I'm sure they can go anywhere else. It is a goal to cut quarterly selling, general and administrative expenses to range of $40 million to $45 million, a significant decrease from current levels. So they're trying to decrease their spending within the company by $40 to $45 million. That's a nice decrease. That's freeing up quite a bit of money. So announced this banking syndicate cut the company's million credit facility by $141 million and will require it to maintain at least $35 million in liquidity. So they still have it. They cut it a little over half, but still, they got $120-something million credit line. Moved earnings ratio that analysts warned it may breach and requires Aurora to achieve certain levels of positive earnings beginning in the first quarter of the fiscal 2021. So giving them a year to try to make some positive earnings. Aurora's $345 million of convertible bonds due February 2024 are trading around 60 cents on the dollar, yielding nearly 20% according to Bloomberg data. The company has remaining capacity under its current at-market equity program of approximately $200 million, and it had $156 million in cash December 31st, so they got a little cash. The company also released preliminary results for the quarter ending in December 31st. It expects to report revenues $50 million and $54 million. Analysts were expecting revenue of $79 million. So they're expecting not to hit that $79 million mark, which with the stock already down so much, if they come out with less earnings than what that $79 million is, if it's still like $50 million, I mean, is that really that bad considering all the issues and problems that's gone on so far? Like, everybody kind of expects them not to hit those numbers, so I don't think it'll dump the stock too much. I don't think investors, if they've held on this long, then they're probably not going to jump out like a majority of investors that are still in it. So I don't think if they come out with less than good earnings that, everybody's going to jump out. I think that'll be okay. But it releases its full results on February 13th. So about a week from now. And that's pretty much it. So honestly, in my opinion, reading this doesn't sound like a company that is going out of business. It sounds like a company that is really trying to survive. You know, they made some nice cuts in the company. Like, they just didn't cut all the small workers who were, you know, picking flowers. They can't, but, you know, they didn't do a majority cut there. They kind of spread it out through the company, including cutting 25% of corporate positions. Like I said, that frees up a lot of money. So to me, there's some positives in the midst of this chaos. You know, they're showing they're not giving up, and that's the most important thing, because once they get through all this, once all the bumps are out of the road, once Canadian legislation loosens up on some other things like the edibles and all that stuff, they're going to start making some money. And once more countries, especially the ones that they're reaching out to, that they're already planted in, once they loosen up legislations, Aurora is going to be making money on a global scale. That was their original plan. I think they just got too far ahead of themselves. I said that before in another video, but I still think that's the case. They just got too far ahead of themselves, took on too much at once, and legislation and all the bumps in the road slowed progress a lot more than they were expecting. So now they have to readjust. That's a smart company. You know, if you make a mistake, you keep bumping your head on the wall to try to get out the door, you're never going to get out the door. As soon as you realize that and you stop bumping your head on the wall and you actually go to the door and open it, then you can get out the door. So they're not bumping their heads against the wall, they're getting out the door. They understand that they have to make changes. They've made changes. To me, that shows a smart company. I'm sure Walt Disney just didn't build Disney out of nowhere and everything went great and smooth in the beginning. I'm sure there was a lot of kinks to work out, but Walt Disney was smart, and now you have Walt Disney owning a whole bunch of stuff. They own so much. So same thing in this case. Aurora is being smart in a time of trial and tribulation, and that shows me strength. Like I said at the beginning of the video, could be that the stock drops some more. You know, that could happen. The stock has continued to drop as it keeps getting drugged through the news. But if they survive this whole thing, which it looks like they're trying to, then this is just cheaper discount prices to get into Aurora. If you're new to cannabis investing, I would probably stay away from ACB for now. Let them get the kinks worked out and start showing some growth. If you're a cannabis investor for a long time now, you probably have a position of Aurora, or maybe you already sold it, but if you still have it or you're looking to get back into it, you could take the little gamble and buy at these cheap prices, or maybe wait till after earnings. That'd probably be what I would do, is wait till after earnings and see how earnings affect the stock and see if it drops more. You know, this could be a great place to be buying discount shares for the future. And if you're already down a whole lot, just kind of weigh it out. Is it worth it just to keep holding? You know, is it that much more of a risk? Because if you sell out right now, you're out of Aurora. Maybe you want to wash your hands of it. That's fine too. That's up to you. But, you know, if it doesn't really make much sense because you're not getting that much money back out by selling right now, then just don't. Just hold it and just wait. Stocks go two ways. They go up, they go down. You have a 50-50 shot, worst case scenario, of the stock rebounding and getting back to those highs, or you lose that little bit of rest of your money. So just wait out and see what makes sense for you. But my opinion, my overall look on this crazy news, I think they're fine. They're trying to survive. That's what they're showing by doing the cost cuts that they did. Terry Booth stepping down, you know, kind of taking the whole blame on him, but still keeping his hand in the pot. And I'm sure he's going to have some say in some decision making. So I think it's fine. But that's just my opinion. Let me know what you think in the comments. If you liked the video, give it a thumbs up. It helps with the YouTube algorithm. I'm your host, Ben, and you've been watching Framework Fortune. Say about the staff here.